Pierre Muller, who's going to be chatting to us about Standard Bank and the recent research that he did on the counter. And then we're going to have Shaun highlight us a couple of technical indicators. And then we're going to have a nice discussion and take your questions afterwards. So I'm going to jump straight into the presentation and give the floor to Pierre. Thank you very much, Pierre. Let me just start the presentation and then obviously share my screen there. There we go. The normal disclaimer. We try and give you as accurate information as possible, but we can't guarantee that everything will work out the way we express our views. We all know that the stock market's dynamic and moves sometimes in ways that we didn't anticipate. But our research analysts are very good, and their analysis does give us good insight into what makes a company money and how we should invest in it, and the use of it in the portfolio. So without further ado, thank you, Pierre. Take it away.
Thanks, Sarel. Good morning, everyone. So we thought we'd look at a Standard Bank from the banks, the first one for the year, as I think it's quite fitting. It was the best performer over the past year or so. So then just looking at the overall executive summary. So from a macro environment, we've seen the interest rates being hiked, and it seems like most are reaching a peak, and now the considerations are, when and how much and if they will come down, but the expectations mostly that they will decrease. So from this rising interest rates, all the banks would have benefited from a higher interest rate environment, for their net interest margins would expand. And particularly also, so for Standard Bank, it's from the local banks, it's quite more sensitive to interest rate hikes. So it had some good performance in this regard. Also, Standard Bank has the most Africa exposure, and it also benefited from the Africa rising interest rates and also some of the volatility that we experience, such as in currencies. So their trading business did quite well also in that environment. On a valuation front, the price to earnings multiple is trading at the lower end of its history. We also have about a 17% upside or intrinsic value of 228 Rand on Standard Bank. And it's trading at a dividend yield of about 7%. So we do see there still to be some value in the share price where it's currently at. And therefore, we have a buy recommendation. We however turn a bit more cautious on this buy recommendation as we look forward to the potential interest rate decreases and the pressure that would put on the net interest income of Standard Bank. The other risks, I think, is the more plain ones, where we would, if you have the higher price compared to the valuation, then it wouldn't, then our valuation theory there would fall away. So that's one. And then also with the higher interest rates and the inflation that consumers and companies have been experiencing, that could lead to credit deterioration. But I think they're quite well provisioned. But I mean, there's always a risk that it could play out worse than one's expectations, perhaps. I think we can move to the next one. Thanks. And on a profit level, so here we're just showing on the half-year results, which was the last results presented by Standard Bank in full. So here you can see that Africa NII, so that's Africa net interest income, and then that third green bar is the Standard Bank South Africa net interest income. So that's the higher interest rate environment that would have contributed there. They also had some loan growth. Then the Africa trading business or income, you can see that second green bar also contributing to the earnings growth. On the insurance and asset management, the insurance side would have benefited from some kind of normalization. So you have less COVID mortality experiences that would have benefited there. And Standard Bank had some elevated operating expenses, but also due to the growth environment. So although it's elevated, should income come down going forward, we do expect that the expenses should also decrease, and the expenses did grow at a slower rate than the income, so your profit margins will still have expanded. And this graph shows the net interest margin. So you can see on that endowment impact, that's mainly the higher interest rate environment. So clearly the higher net interest margin, that would be to the higher interest rate environment. So that just, this graph just proves that side of things. And then, so in this graph, the 2023 year figures, like I mentioned, we don't have the full year results yet. We're expecting them mid-March. But we use the half year results and just annualize them to keep it simple for now in this graph. And this is the year-on-year growth figures. So first, we're looking now at the corporate and investment banking side. So looking at the net interest income type of revenue, the net fee and commissions, and the trading business. So you can clearly see that the black and grey bar, that they're quite high. So meaning that growth was quite a lot recently. So my expectation is, I think there's still a little bit growth in the future. I don't necessarily think it will contract heavily, but it's definitely going to be under pressure. I don't expect the same growth, so the growth rate is coming down. But yeah, that's the one point of it. And then we look at the next slide. So this is the personal and just one back. So the personal and business banking net interest income. So just on the net interest income here, you can see the same story. The growth was recently quite elevated. So I think it's a story about a bit of a, being cyclically a little bit high at the moment. And therefore, I think the growth rates should face some pressure going forward with this higher bases in it and possibly lower interest rates. Then it's a good idea to just compare some of the other banks to Standard Bank. So these banks have the same year end, so a bit more comparable. So you can see there clearly Standard Bank having a larger trading business, so trading revenue, and also having a larger insurance and asset management side. That's due to the acquisitions. Liberty, not Standard. Liberty. Apologies. And then also you can see Standard Bank having quite the larger Africa exposure there, 44%. So some of just the growth rates that we see in the half year results compared to the other banks, you can see Standard Bank net interest income is up 35%. And on the graph at the right hand side, we're comparing the net interest margins between the banks. You can see how Standard Bank's line moves around a bit more. That's the blue line compared to the other one. So that's where I'm saying it's a bit more sensitive to interest rate hikes or decreases. And then some of the growth will also be through the growth in the loans or the average interest earning assets. So Standard Bank still, so that the net interest margin that expanded and the average interest earning assets growing. So we still think the interest earning assets should have some growth, but it might come under pressure as banks start to get more careful, in extending credit going forward. And then on the coverage ratio, most banks are quite high. It's quite a story around. And yeah, I think that's basically this slide what I wanted to talk to there. On a price impact, as I mentioned, Standard Bank performed quite well over the last year, outperforming and also outperforming the other banks. And on a valuation front, so I think the share price is currently just below 200 rands. So still below our intrinsic value, offering some upside. And the price to earnings, as you can see, this is a forward PE, as per fact said. So you can see there it's trading at the bottom to this history shown there. So also showing some value still. Thanks. That's everything from my side.
Okay, cool. So then we'll hop into Shaun's technical bit. I've brought the chart up, Shaun. Hello, Shaun. Have we lost Shaun?
Hello.
Yes, now I can hear you.
Sorry about that.
Go for it.
Okay. Yeah. So the chart of Standard Bank shows the share price is trading just below that 21-day and 40-day moving averages, but it's still trading far above its 200-day moving average. So I'm calling the long-term trend bullish, with the share price also trading just above that long-term ascending support trend line, and that's I believe that support trend line is quite important. I'll come back to just now. The oscillator at the bottom here, the MACD indicator, is trading in oversold territory and just below its trigger line. At this point in time, there's no real bullish signals yet, but the shorter term stochastic indicator is also trading in oversold levels, but seems to be more bullish. A bit of mixed signals there. Saying that, as Pierre said, now the share price is trading just below that 200 Rand level, trading about 199, and we can expect the share price to retest that long-term support trend line before rallying above that 21-day and 40-day moving averages. If you had to zoom into the chart, you'll see that the last 2 days, the price action is what they call nearly a doji. So the open and the close are very, very close. So there's a bit of uncertainty there. But saying that, you know, if it does move up higher through all those moving averages, the target will be that previous resistance level at 210. And as Pierre said, now the intrinsic value is still way above that at 228. And as I said, we've got a buy recommendation. If you look at, if I look at all the other technical indicators not shown here, things like, for example, the price volume trend indicator, it shows a steady volume accumulation from June last year, which is that started that dip, that started that long-term moving average. So it shows you long-term volume accumulation, which shows you also good demand. If that trend line does not hold on the downside, we could expect that a breakout below that long-term trend line, support trend line, and obviously that will trigger a change in trend to bearish in the medium term. I don't think it'll do that, but anyway, that's a possibility. The previous resistance level at about 189 will then act as the new support level, and also the 200-day moving average at 187. So that's where I anticipate to go. But at this point in time, I suggest watch very closely that support trend line. Thank you.
Thank you very much, Shaun. Okay, so guys, I want to ask you, if you have questions to ask, just raise your hand or just put your mic on and your camera, and then you can speak, or you can type it in the chat for us. I'm going to go check the chat now. Before I do that, I have to unfortunately drop the sharing of the screen, but I wanted to hop back to this and just wanted to reiterate what Pierre said. If you look at this and you compare these three banks, Absa, Standard Bank and Nedbank, then on a net interest income basis, Standard Bank grew more than the rest. On non-interest revenue, they grew more than the rest. Find the operating expenses were higher because they were expanding. They had less impairments than the rest. So all in all, I think this is a good bank. And bearing in mind what we said last year and what the expectation was when we had a vote about where we want to see the market going, then looking at a potential 15% upside based on intrinsic value, definitely one of the stocks that you could consider for inclusion in your portfolio. Okay, I'm going to hop to the chat now and see if we have questions there. Let's see the chat quickly. Bobby says, hi, do you have buy or sell recommendation compared to the other banks? I think at the moment we have buy recommendations still on First Rand and possibly Absa. Standard Bank now joins them. Nedbank and Capitec we have holds. Am I right, Pierre?
I think so.
Capitec
The Nedbank,
actually. Yeah.
No. Capitec, we recently, I think last year, close to end of the year, we made a buy, and Nedbank we're on a hold.
Okay, all right. So there's potential in the financial sector, it seems. The stocks are slightly undervalued, and the technical chart that Shaun showed is also showing that uptrend quite nicely. The next thing is, Bobby says, can I also request that Teams invites be sent when you send out announcements for these calls? I suppose I could do that. Bobby, I'll check into that for you. I typically send out a mail on the Monday or Tuesday just highlighting the next week's chat, but it's same day, same time every week. It's 11:30 on a Thursday. And next week, we are talking about redefine. So back to the property sector next week. For those that are on the call, I don't see any other questions. Guys, if you've got questions, please ask. Otherwise, we're going to close the call. Bobby says thanks. Yeah, it looks like that's it, Pierre. You did a good job, Shaun. Thank you for the technicals. Pierre, thanks for your insights. Definitely worth it to look at these banks side by side like this, and compare their different revenue streams and that. But yeah, all in all, like we said, Standard Bank has potential 15% upside to intrinsic value. So if you don't own banks, or you haven't got Standard Bank in your portfolio and you've got some cash, then something to consider for possible inclusion. We'll be back here next week, same time, same place, and we'll be talking redefine. So looking forward to that. Thanks, Pierre. Thank you, Shaun, and I wish you all a fantastic Thursday. Cheers. Bye-bye.